Today I'm here with Colin Mason from Mortgage Choice, just down the road from my office here in Budrum. Colin Mason is my mortgage broker of choice. He's got a lot of deals together for my clients in the past. I found his communication to them and to me has been absolutely fantastic, so thanks Colin.
Thanks, Lauren.
I thought he'd bring him in today to have a little bit of a discussion about first home buyers. I know before I came and saw Colin I had no idea basically how much money I was going to need, what the process would be, and ultimately how much it was going to cost me a week to purchase a property and live in it myself. Once I had that consultation with Colin, I walked out with a really clear idea and a goal, and I was able to carry on from there and knew exactly how much money I needed to save and how much per week it would cost me. So what we might do is we might run through a scenario.
Yeah, most definitely.
Yes. Particularly for first home buyers, because a lot of people don't take the first step to seeing a mortgage broker, and they really don't have any idea what the process is, how much it costs, and a lot of people are just sort of writing it off as unachievable. So do you want to explain to everybody perhaps the scenario of a first home buyer purchasing a property for around $300,000?
Yeah, look, certainly. Generally what we do is if the first home buyer is looking at entering the market, so buying their first property, we'll generally sit down with them and go through what's involved. So first of all, how much can they borrow is probably the most important starting point for a first home buyer, just so they know that they're not entering the market going in above what their normal means are, in terms of their financial situation. So that's the most important thing. Once we establish what their borrowing capacity is, we'll then go through and discuss their options with the different products or the different lenders out there in the market. Also the areas that they want to buy in, because depending on how much deposit they've got, the mortgage insurers won't allow them to buy in certain areas, or if the property's on large acreage, there'll be restrictions around that. So we need to establish exactly what they want to do after we establish their borrowing capacity potential. We'll then go through, once the product's chosen, we'll then go through and have a chat with them about the repayment side of things. So let's just say $300,000 purchase. At a starting point you need 5% deposit, so you'll need $15,000. Now if you don't have that saved, there are a number of banks there that will allow you to have that money gifted to you. Now if you get that gifted to you through family or friends or auntie and uncle, etc., as long as you're renting and you have been for at least 6 to 12 months through a property manager, and the property manager can show that you've paid rent on time and that you haven't been overdue or late, then the bank will use the rent as a form of genuine savings. So as long as you've got the 5% deposit, that's an avenue that we can take, and an opportunity for you to, for a first home buyer to enter the market.
Sure.
Another way of entering the market is to have a guarantor in place as well. These days, clients or first home buyers are fortunate enough to have mum and dad who have a lot of equity in their existing houses, whether it be their owner-occupied house or if they've got an established investment portfolio, where the parents will put up some equity for the 20% deposit. So that basically means for the first home buyer that they avoid paying any mortgage insurance. Now just to touch base on the mortgage insurance. So the mortgage insurance is something that a buyer will pay if they have less than 20% deposit in a transaction for a property purchase. And that can range from anywhere from $1,000 up to $25,000, maybe even more than that.
Sure.
So it can be quite a lot of money. What's involved with the guarantee? It's a limited guarantee, so mum and dad will put up 20% of the purchase price. So if we go back and use that example of $300,000 for a property value, it would be $60,000 plus the costs. Now the cost for a first home buyer on a purchase price of $300,000 will be roughly around that $4,000 or $5,000 mark. There's no stamp duty for a first home buyer up to the value of $500,000, so they avoid that stamp duty cost, which is a big saving for them. They'll still pay bank fees. Now bank fees can be $0, so nothing, up to about $1,000.
Sure.
You've also got transfer duty, which is payable. Now that can be anything. On a $300,000 purchase, you're probably looking at around that $500 mark. You've got your government registration fees of $132.50. We multiply that by 2 because the government will automatically pick up the discharge of that registration at the back end of the process, but they'll take the money up front. And then you'll have any settlement fees through your solicitor or conveyancer, which can range between $500 up to $2,500, somewhere around there. So basically, once we get all that down on paper, so Going back to the guarantee option again, so the 20% guarantee, so $60,000 plus the cost, so about $3,500 to $5,000. So mum and dad are now guaranteeing $65,000. It allows the first home buyer or the buyer to borrow 100% without any deposit, and they still receive their first home buyer's grant as well. They are still the owners of the property. Mum and dad have got nothing to do with the ownership. They're just guaranteeing that 20% deposit. So it allows them to get in with no savings, although it's still good to have some savings to show the bank that you're committed. But if you're renting, we can still use that as a form of genuine savings as well. But that's an avenue that we're using more and more these days.
Yeah, that's the bit that I like. I think that's really good, that the banks really should recognise that if people are paying rent regularly, it's a really good sign that you're able to make repayments. So that's definitely a good thing for people who have been renting up until now.
Yeah, most definitely. Look, I think these days with rents soaring through the roof, which it is at the moment, because investors have obviously been hurt hard the last 5 or 6 years with rising interest costs, so they've had to increase the rent that they're getting on their investment properties. These days, first home buyers, I mean, like the average household income here on the Sunshine Coast is just over $55,000 combined household income. And when you're paying rent of $20,000 or $25,000 a year, it doesn't leave much more for savings. So it's important these days that the banks realise that there's genuine savings in the rent that they're paying.
Yeah, for sure.
And as long as you can have the 5% deposit, there's opportunity there.
Yep. And what are a couple of other opportunities that you've mentioned to me in the past? For example, that they are recognising rent and that sort of thing. What about things perhaps low doc or any other circumstances that people might think affect them borrowing? Are there any other things like that you can explain to people that the banks are starting to recognise? Yeah,
look, most definitely. Look, I think the big thing is the rent, obviously, that we've spoken about. I mean, banks recognising rent as a form of genuine savings is important. Other aspects that the banks are considering now is using 100% of the overtime or commission income, depending on what industry you're in, but definitely the mining industry, which is an industry that support a lot on the Sunshine Coast. There's a lot of buyers that we're seeing, especially first home buyers that are moving away or at least travelling away and then travelling back when they're off roster. So banks are now using that income, which allows someone in that type of industry to use 100% of their income instead of only using half of it or even a third of it. Because I mean, that type of industry, you do a lot of overtime, especially in the mining industry. There are a few banks out there now that will also discount the mortgage insurance premium for first home buyers. So that, again, that's competitive. No one wants to pay mortgage insurance, but for all first home buyers, traditionally they will pay it once to get into the market. But the whole idea of it is once you pay it once is to sit in that property, pay the debt down, or earn some equity back from that property, so that you're not having to pay it again and again. Otherwise, you never get ahead with the mortgage that you're paying off. Okay, sure. So basically, if someone wanted to purchase $300,000 home, they'd pay $15,000. That would be their deposit. Say around up to $3,000 for miscellaneous fees, approximately. We'll just call it that. Yep.
So that's $18,000. So once you get your $7,000 back, it probably costs a first home buyer $11,000 these days to get into their own property. Is that right? Yeah,
that's correct, Lauren. Basically, the $15,000 is your 5% on a $300,000 purchase. You've got the $3,500 to $5,000 in expenses, but you do get your first home buyer's grant as well. So you're right, it does cost around that $10,000 or $11,000 mark that you will get back, or that it will cost you, sorry. And then, as I said, that can be a gifted source of money, or it can be genuinely saved, so money going into your bank account from your wages that you're earning per week or per month, etc. But it can be gifted to you as well. Okay, that's great. And what about the repayments on a $300,000 loan? Are you going to know that off the top of your head? Yeah, look, I mean, repayments on a $300,000 loan, if we use the 5% deposit, so we'll do a 95% loan, which is $285,000 plus some mortgage insurance, you'll end up with a loan of around $291,000. Now, if we work out what the interest cost is on that, we'll use 6.15% at the moment, which is around the middle of the ballpark.
Okay, that's good to know. I'll put you on the spot now.
Okay. You're looking at per week around $345 a week.
Wow.
That's just the interest cost. So if you wanted to pay some of your loan off, which most first home buyers would get the advice from us that you do that, you're looking at around that sort of $400 to $420 a week.
It's a lot more affordable than people would think, and especially if you're going to get somebody else, one or two people into a room, it wouldn't be much more than what you're paying in rent, most likely. So
Look, definitely right. I mean, if you get in the market now and you're paying $400 a week and you're only renting at $350, it's not going to take long before that rent that you're paying at $350 a week is now $400 a week and then $450
exactly,
a week.
yeah.
So it's good for a buyer to realise the opportunity, and if they've got the money to get in and start paying what they're usually paying in rent towards their own house and paying down some equity, it's perfect for them.
Well, I think that's really exciting. So hopefully anybody else that's watching this has taken all of that in, and perhaps they might like to come in and see Colin and have a consultation themselves, and he'll be able to tell you how much you'll be able to borrow, how much your repayments will be and all that sort of thing. Even if you're not thinking of buying for another 6 months or anything like that, it would be good to come in and see Colin, because then you'd have a really clear idea of how much you need to save and perhaps set some goals.
Yeah, look, most definitely, and the consultation is free, and probably the most important thing with mortgage choice is how we get paid is by the lender, not by the actual buyer.
Yeah, for sure.
And it's all the same commission too, so there's never any bias advice between one lender to the other. It's not all about us, it's about the buyer.
Yep, I would definitely recommend engaging in the services of a broker. As Colin said, it's not going to cost you anything, but it's certainly going to get you the best deal, and you only have to deal with one person. So, yeah.
That's correct.
Yeah, well, thanks for your time, Colin.
Thanks, Lauren. Cheers.